What's your profit margin?
Circa 50%.
Mr. Sheedy?
Slightly higher.
Why is it that small businesses continue to use Visa and MasterCard when you're getting charged so much more? Maybe is it because that Visa and MasterCard are effectively monopolies? They control 80% of the market. The DOJ lawsuit says that you threaten retailers with staggering financial penalties. That's a quote, staggering financial penalties if they use a competitor, and you're paying Apple and Square and others not to compete in your market. You've got 80% market share and you are paying off would-be competitors not to come into the market. This is just classic collusive monopoly behavior. And your testimony is you can't accept any more competition. This has to change.
How does a company make this much money? It doesn't lend money. It doesn't take credit risk. It doesn't even issue cards. To understand what's going on, we need to rewind. Before contactless payments, before Apple Pay, before online shopping, let's go back to where this all started. It's the late 1940s in the United States of America. Money is still backed by gold. The economy is coming out of the Great Depression and starting to grow massively. At this time, there was a small group of bankers experimenting with something simple: paper charge cards. They work like cash, but only locally. A handful of approved merchants tried it. However, these systems soon fail, and they fail for one reason: they aren't scaling big enough. A credit card is useless if merchants don't accept it. Merchants won't accept it, customers don't have it. This problem killed early cards again and again, until one bank changed everything. In 1958, Bank of America launched Bank Americard. At first, it was chaos. Fraud exploded. Losses piled up. But by 1961, something changed. Bank Americard quietly became profitable. However, by the 1960s, most US banks were trapped. Many states banned branch banking. Some states allowed only one physical location per bank. A single bank could never build a national payment system alone. But many banks together could build a behemoth. In 1966, in Buffalo, New York, multiple banks formed the Interbank Card Association. Not a company, an alliance. No single bank controlled it. Committees governed everything: authorization, clearing, settlement, security, legal rules. This wasn't a card company. It was financial infrastructure. And that distinction changed everything. By 1969, it was called Mastercard, the interbank card. The logo became two overlapping circles, symbolising interoperability. Many banks, one system. By 1968, Interbank expanded internationally: Mexico, Europe, Japan. By the 1970s, members stretched across Africa and Australia. And in 1979, the name changed to as we know it today: Mastercard, a name designed for global reach. By the late 1980s, Mastercard became the first payment card issued in China, and later in the Soviet Union. When Mastercard went public in 2006, the share price was just $39. At the time of filming this video, Mastercard trades at around $580. That growth didn't come from inventing a better card. It came from owning the rails that global commerce runs on. Most people misunderstand what Mastercard does. It does not issue cards. It does not lend money. It does not take credit risk. And the model? Every swipe, every tap, every online checkout, a tiny fee is charged. This is multiplied billions of times daily. Mastercard, alongside Visa, dominates global card payments.
Effectively monopolies, they control 80% of the market.
Certainly part of the
80% of the market?
Even through recessions, through financial crises, through regulation, they keep growing. And once the world depends on your system to move money, value compounds. If Mastercard's network stopped for just a few minutes, entire economies could fall. That's why governments regulate it, and why they also depend on it.
Visa and Mastercard and the folks, the retailers, need to sit down and work this out. Because if you don't, Congress is going to do something. But Visa and Mastercard, when we get through with you, you could end up looking like either the post office or the Dallas Cowboys. I'm not sure we'll get it right.
And Mastercard is already planning to shape the future of payments. And it isn't about plastic cards. It's about identity, biometrics, tokenization.
E-commerce is growing exponentially, and shoppers expect a payment experience that's fast and secure when they shop. Some shoppers prefer the convenience of storing their card on file with the merchant, but still need to update their details when cards are expired, lost, or stolen. Others prefer to check out as a guest, but entering card details every time they make a purchase can be a hassle. Mastercard's tokenization and checkout services. Tokenization is the process of substituting a card's primary account number with an alternative card number called a token, thereby masking card details. Each token is uniquely mapped to the cardholder, merchant, and transaction, so it can't be copied and reused. Mastercard offers simple, secure payments that drive more successful transactions, no matter how your customers choose to pay.
The cash system will likely continue to decline, and digital wallets will continue to grow. Mastercard is positioning itself not just as a payment company, but as a global technology and security platform that plans to dominate the global financial system. What do you think the future of payments will look like? Is cash going to continue to decline and digital wallets grow? Or do you think crypto could replace them? Or even something else? Maybe a resurgence in gold? Let me know in the comment section below. I hope you have enjoyed today's video. Don't forget to like and subscribe, it really helps the channel. And I'll see you in the next video. Have a great day, keep sharp.
It's really rewarding, they're successful, they have their life in order. It's just simple, keep your life in order.